Okay, so in this video, I'll give you the 3 biggest hacks that I've used to go from being a break-even trader to a profitable trader with over a 75% win rate, making 200k from my live trading account, as well as flipping small accounts to big money and passing retail prop firm evaluations. Now, is this difficult to do? Well, no, not really. But we as humans have an innate desire to make the very simple incredibly complex because we believe that more complicated must mean better. But my success has come from keeping it simple. So I'm going to give you 3 hacks to gamify trading and make you profitable. Number 1 is stop focusing on the money. Focus on one thing. Now, we are what we repeatedly do. So we all know that 10,000 hours of practice will lead to world-class expertise. So instead of strategy hopping and changing what you're doing, find a system with a 50% win rate at 1-to-1. Now that's easy. You probably already have one. So double down on that system, figure out where you can improve it, where it works best. You don't play Warzone and expect to win every game when you first start. You play to get better and gain experience, and trading is no different. You level up, you focus on routine, you work hard. In Warzone, maybe you play best with a sniper rifle, so guess what? You double down on using a sniper rifle to gain XP and level up. How do we do this in trading? Well, we focus on data. If we focus on data, then we will succeed long term. We have to build data like XP. Not every winning trade is 1 XP, every trade is 1 XP. Everything logged, every piece of data in your spreadsheet gains 1 XP because you're gaining experience and you're on the path to profitability. You have to do the reps here, and we want to level up our knowledge, not our balance. So we're not looking at the outcome of every trade. We're literally recording every trade. And your goal in this first phase, this first hack, is just to simply find a 1-to-1 50% win rate system at least. If you find that, I guarantee you can find an edge in the market, because there'll be little tweaks that you can make to make that edge profitable. Your goal is just to take 100 trades, 100 trades at 1-to-1 and log everything. Log your missed potential, log your drawdown in pips, log the time of day, log the session, log the asset, log absolutely everything. Do 100 clean reps with no emotion, and you're just logging and gaining experience as a trader. That's all your goal is. Now, most people rush this phase. They want to make money, so they're focused on the outcome from the get-go. But the goal here is simply just to focus on the process. Build the data, log it, and execute.
And I'm pretty sure I am going to win this. Please God, no. That's okay. Oh, no. Oh my God. No. Please, Lord. No. Yes. It's nearly there. I've got 10 seconds left. No. Yes. Please, stay there. For the love of God. Allah. Oh, no!
Hack number 2 would be treat trading like a game with levels. So every game has levels, right? And when you're progressing through the levels, level 1 is always the easiest. So I separate my mentorship into levels. Level 1 is just 100 trades, record the data, ignore the outcome, and then you progress to level 2. And level 2 is where we start to get better, much like in a game. And level 2 is where we dissect the data and refine. Level 1 is easy to pass, so stop trying to do that difficult stuff in level 1. It's all just gaining XP and learning, doing the reps. Then in level 2, we start to see what works and what doesn't, like in the game. So we need to do more of what works and less of what doesn't to win. The best players have similar habits in games. You'll find that they do similar things, they have similar traits. It's much like the best traders. So your job here is just to execute like a machine, calmly, consistently, without hesitation. You can see here, this is just some of my data. I record the result, the time of entry, the missed potential, the drawdown in pips. Alignment is a big factor in my entry model, and I'll show you a little bit more of that later. I also have a free PDF under this video. If you want to grab it, it will show you how I use alignment in the markets and cross-asset rotations. But it's here you start to spot nuances within your edge, within your data. Which market conditions does your edge thrive in? When do you need to step back? When do you need to scale up? When do you need to stay patient, sit on your hands? When do you need to execute relentlessly? And this is where you start moving into a flow state. You start trading with flow. Do you ever see some of the best streamers playing? They're in their flow state from start to finish. That's why they're so good. That's where we need to be as traders. And this is when losses don't shake you anymore, because you know the numbers. You've seen the data and you know the numbers behind your edge. So you stop chasing trades and you start waiting for the market to come to you. You've become an operator, not a gambler at this point. Now, hack number 3 is environment. So you need to know when the market environment suits your strategy. And this is where I think most traders fall off. Maybe you work best in trending markets. I know that I work best in ranging markets because I trade mean reversion. So ranging markets suit my edge. But market environments are just like maps. Some maps you perform better than others on. And if you're playing in a map where your edge isn't present, that's when you need to take your foot off the gas. Maybe size down, maybe even walk away. Wait for a map, wait for a market environment that suits your playing style, that suits your edge. A really great example of this was this level that I'd pre-identified on GBP USD only yesterday, and I didn't take a trade. Now this level actually worked. It played out. It did 1-to-1 R, and that's what I expected off the level. Why didn't I take it? Because I knew the market environment wasn't what I needed to see to trade. And it's like a game. You have maps you perform best on, you have maps you suck at. This particular map or market environment didn't provide me with an edge. The result of the trade is completely irrelevant. I know that if I took this trade 100 times, I wouldn't have edge. I wouldn't make money. So this one trade is meaningless. And I only know this from my data. It's so boring me going on and on about data, but it literally made me multiple six figures, so how can I not? Now I had the tick boxes for this trade, but one was missing, a clear correlation. And as a result, I recognized that I didn't have an edge. Or if I did, it was diminished in this environment. But by not being outcome driven, I didn't even care what the trade did. It worked, it loses, it's irrelevant. It's irrelevant to how I feel, it's only relevant to my data. Then if this occurs 100 more times, I can determine whether I do actually have an edge in this environment. This is how you need to be thinking. In large data sets, in 100 trades plus, 1,000 trades even better, not one. So how do we do all this? Well, we learn by doing. You're not going to learn a strategy from a 20-minute YouTube video, even like this one. You're not going to learn a strategy to trade. What you need is to take a simple concept and repeat it at least 100 times, maybe more, and you build a strategy through data. Take a simple concept. Mine is mean reversion, supply and demand, or even support and resistance. Find what happens at these areas. Look for patterns in your data. What works and what doesn't. Do more of what does. Simple. That's our only goal as traders. Because trading becomes addictive when you chase money. It becomes sustainable when you chase mastery. The top traders aren't emotionally detached because they're special. They've built systems that reward consistency, not excitement. They're not chasing the outcome. You don't beat the market by being clever. You beat it by mastering the game's rules better than anyone else. And if you focus on the process over money, long-term trading success will happen. That blue line was me for 5 years. I was driven by the money. I would even have a profitable month and I'd start going on compound calculators looking at what I could buy with that money if I kept that performance up for the next 3 years. It's crazy. So where do you start with all this? Well, I imagine you're watching this with some form of trading experience, but either you have a model or you have an edge, or at least you've traded a model previously, but you need to start putting this all into a trade plan. Make it super simple and track all the variables. So I just have some simple variables here. The asset you're trading, the date, the entry price, the type of level. This is determined by my strategy, the result of the trade, the time of entry, missed potential. How many pips did the trade do without me? The drawdown in pips, this is crucial for stop loss placement. Big factor for me is market alignment. Now I know if I filter this column out, if I add yes to alignment, my win rate for the last 2 months is 100% with alignment. I have not lost one single trade. If I put it to no, I have a 37.5% win rate. So I can see that I should not be taking trades that don't have alignment, and that's replicated up here. My edge lies in exploiting mean reversion at supply and demand inefficiencies confirmed by cross-asset rotations and correlation dynamics. Now, what does this mean? It simply means that I don't just consider the FX market to take an FX trade. I'm also looking at the bond market, the indices. I'm looking at where risk is moving. Sounds complicated. I promise you it's not. But if you took my edge away tomorrow, give me 3 months and I guarantee I will find another one because I understand the process of how to get here. I had an edge and I lost an edge years ago. So I know the importance of data and staying on top of everything. My process is data collection. The money and the income as a trader are simply the byproduct of all this. And I have records of this for years. This is just simply the last 2 months. I have every trade I've taken this year. I have every trade I've taken last year, the year before, all recorded in Google Sheets and Notion. And that tells me exactly what I need to be doing on any given day in the markets. I encourage you to take a simple concept, put it into a trade plan, then start breaking it down and recording everything. Forget about making money, forget about doing anything outcome driven, and just focus on the process now for the next 12 weeks. When I work with a trader, I guarantee I can make them profitable in 12 weeks because I'll give them a system with a positive expectancy. I'll show them how to record everything in data. Then I'll refine that data with them to make it even more profitable and increase the win rate. So I'm going to give you a bit of the secret sauce here, and I'm going to show you a trade that we took on gold just 2 days ago. Now we've had a couple of other trades since, which have all played out for 100% win rate this week. But this was just a simple area of demand on gold, which we pre-identified. We used cross-asset correlation to take the trade, and as gold pushed into this area of demand, took a very quick trade for a 1-to-1 risk reward. Now, why did we have to take that trade? Because our data told us to take it. Our data gave us clear bias and told us that that had over a 75% chance of doing 1-to-1. Yes, we're against the fundamentals, the overall direction, but we're mean reversion traders. Trade pushed in, or the market pushed into that area of demand. It reacted for over a 1-to-1, and this trade just simply gets logged in our spreadsheet. October 27th, 2025. Go back, have a look at your charts. There was a clear area of demand at 39.79. I log all of it. I log the time. I log the missed potential on the trade. So I took 1-to-1, but it did 1-to-1.5. So I missed 0.5R. I logged the drawdown in pips, which was 9. I logged the closed R, which was 1. And I logged some other data as well. Lots of other bits of information, but really simple trade. I knew I had to take it because I had positive expectancy on these kinds of levels. But without the data, how would I know what I'm doing here? How would I know where I need to be trading? I don't have data on daily bias. I don't have data on the last week's close, the last day's close. My data is simply on mean reversion, and the way we identify mean reversion is non-subjective, it's non-discretionary. Every single one of my students will have the exact same trade, and they all traded it with me. Exactly the same today on GBP USD. We had a clear push into an area of demand. Using cross-asset correlation, we took 1-to-1 off this trade. You can already see that it's done well over 1-to-1 now, so this one has moved to 2. That's fine, that goes as part of our data, that's something that we log. On this particular trade, we were happy to take the trade because we had over a 75% expectancy that this would pay us at least 1-to-1. Super simple. And again, my whole mentorship, every one of my students took this exact same trade as me today. How do we time the bottom of the market almost to the pip over and over again? We do it by cross-asset correlation, risk sentiment, market flow dynamics, and simple supply and demand. There is no mistake here. We watch this play out 75 to 85% of the time. And even through Q2 of 2025, we operated at an 88% win rate. But we only know all this because of our data. If we didn't have the data, we wouldn't be able to do this. We wouldn't be able to be as successful. So this is literally how you need to be operating as traders. You need to be collecting data. You need to be treating it like a game. You need to be focusing on that phase 1, just building data. Outcome doesn't matter, process driven. Then you need to be refining that data, working out what works, what doesn't, figuring out what market environments you perform best in, and then just executing. That's your only goal. More robotic you can be with your execution once you get to that stage, better your P&L will look.